largely lower post the handover that they have gotten from the Wall Street.
The gross and the net NPA figures of particular banks March 2023 under 5% as far as gross NPAs are concerned.
So NCLT Mumbai has approved the scheme of arrangement for Reliance Strategic Investment.
Key reason for the downgrade is one, the stock is rallied 46% Y2D, and now the premium, the valuations are at a premium to the long-term averages.
Starting off on a bit of a cautious note, which was expected given the sell-off in global markets.
The moral of the story is that be invested regularly, irrespective of the levels, and you won't be disappointed.
Uncertain macros have led to a cut in discretionary spending. Projects are getting deferred.
We are estimating a 50% growth for our coverage universe in profits and 25% for Nifty.
There is a lot of good pipeline coming in from various civil opportunities as well. So we are tracking a very healthy pipeline.
Last 45 minutes, 1 hour or so, we've seen the market slip. So we're currently down 100 points from the day's high.
Almost 77% of the fund managers say the market is heading higher in H2 2023.
Despite a 3-month window given in February to the airline failed to do so, failed to make that payment.
Good afternoon. That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi Upadhyay, Nigel D'Souza, and we've got Mangalam Malu on the newsroom. It's the first real correction, right? Some correction that we've seen after 8 days of a very hectic rally where the Nifty has seen an up move of 850 points. So today, if you pull up that intraday chart, you would see the first dip in the market came in right at opening. That was bought into. The Nifty went back to levels of 19,500, conquered it, crossed it. But again, since then, from 10 o'clock, the markets have been sliding. You're getting the sense that the markets are again trying to find support around the 19,350 mark. That's largely the intraday low. So we're trying to seek some support, find a bottom at least for the near term around 19,350. That remains to be seen. But this is the first correction that we've seen in the markets. Europe, pull up the European market screen. After yesterday's cut of 2 to 3%, again, Europe has opened up mildly lower on the back foot there, down roughly on an average of about 0.5%. Mid-caps too are off from the session lows, but still under pressure, down about 2/3 of a percentage point, with the advanced decline ratio well in favor of the losing side. What about the individual big movers?
Well, individual big movers, the biggest of the lot has been the listing of the day, and we've been spending a fair amount talking about that. Despite the market cool off, I mean, absolutely no cool off in Idea Forge. It's still clocking a gain of almost 92, 93%. So I guess the founder promoters will be singing all is well to themselves. That's been, of course, today's mega listing, 92% and counting at nearly 1,300 odd. Beyond that, some of the newsmakers of the day have managed to hold out in green territory. So, for instance, Subros, with the policy going sort of underway in terms of getting AC cabins in commercial vehicles. That's a stock up 5%. And Kalyan Jewellers, which has had a scintillating Q1 update, their India business growing over 30%, if I remember Mangalam telling us correctly in the morning. And that's a stock that's up about 6.5%. But other than that, yes, there is a cool-off or a profit-taking sort of a session that's playing out even in the mid-cap market. There's no denying that. So I'll just name some of the ones where things are cooling off. Dabur is down 2.5%, AU Small Finance Bank, MRPL. But the losses are between 2, 3, 4%. I mean, it's a general few percentage points being shaved off. There is no major slide or no counter that's seeing a massive sort of erosion today. Just a general, little bit of a taking profit off the table sort of a scenario that's playing out. Mangalam, what are you looking at?
I'm looking at a bunch of stocks, and it doesn't look like a big problem right now for the market, this decline, largely because it's being slowly bought into. The indices that were impacting the market through the day was actually the IT index. And the IT index actually has come off the lows. TCS has actually moved to the high point of trade. And the Nifty Bank has managed to claw back to levels above 45,000 just as we speak. And Nifty itself is up around, from the lows, it's closing in towards that 19,400 mark, which is an important support. And a bunch of these mid-caps, now they're surging as we speak. Z Entertainment at the high point of trade. We're seeing a big move come by on a couple of these pharma names as well. Glenmark, Granules, both of them doing well. PVR, after a long time of decline, has come back. So we've seen a wee bit of buying in PVR as well in perspective of the decline that we've seen out there. and Petronet LNG, Hindustan Aeronautics, all of them from the broader markets doing well. So yes, the indices are seeing a bit of a decline. We have seen more decliners than advancing stocks today, but that's after 8 days of a rally and no real collection. In fact, if anything, that's being bought into, especially in the individual stock size. So maybe this decline was largely on account of excesses being taken out. Nigel?
Yeah, Mangalam, I was just looking at a couple of data points. The PCI that was going to that overbought territory, now too comfortable at more than 1.5 odd, it's pulled back a little bit. That's because of the kind of action we have seen on the call side today. So it appears the call writers are back. The highest open risk build-up that we've seen today is at the 19,500 call, 19,400 call. And earlier today as well, we made this point that it's getting too cute or too comfortable for comfort. When you're looking at the FI positioning, when they're net long by more than 1 lakh contracts on, it was getting a little bit too complacent. So some kind of pullback, I think it's healthy for the markets. On the downside, the Nifty Bank is the level that we're looking at. It's close to around 43,894. Pull up the Nifty Bank only. The Nifty Bank, the intraday chart should come up for you. 43,890 odd. That's the important mark we're looking at, and we're almost at that mark. So that's going to be important. We're 100 points away from that mark. So you want to look at the 50 DMA. The big question is, getting into the weekend, how should you position yourself for the final hour of trade? Mitesh Thakkar joins us to tell us exactly that. Hi, Mitesh.
Hi, Nigel. Good afternoon. So, we talked about the test of 17,350. In fact, the low today, 19,350. I think the low we got was around 19,345. That's a key support area on the short-term intraday chart. So we managed to hold that. My sense is that I think, if that doesn't get taken out, we are possibly re-attempting 19,500. And then let's see if we have the strength to make a higher high. So for the time being, it's a market which remains positively biased. We have suggested trading the stop loss to about 19,330 on the spot Nifty. It remains. And on the stock side, I have a buy on PVR, which is reversing with a very strong price bar today. Recommend buying here with the stop at about 1410 for targets of 1,500. And a buy on L&T Finance, which after a 3-4 day of correction could possibly move up again. So keep a stop just below today's low of 127.9. 10% below that, and a target of 137 can be.
Okay, got that. Thanks, Mitesh, for the calls. We'll come back to you in just a bit to get some more ideas. Let's focus on one of the key themes, the big story in the market today. India's largest drone maker, Idea Forge Technology, made a stunning blockbuster debut on the street. We've been talking about it, 92-93%. That's the kind of listing gain that we have seen, almost doubling. In day one itself. Just some trivia on the company. Not only, of course, we're talking about the three founders who were in IIT, and it was this company that made the drone for the movie Three Idiots, but also the company counts the likes of Infosys and even Qualcomm as early investors. So just some trivia about the company. But Hormuz has been looking at a lot of details surrounding these mega listings. Idea Forge definitely goes in the listing hall of fame. Who are the others, Hormuz?
It does definitely go into the listing hall of fame, but I'll talk about the listing itself first. And it was a 93% premium at which the stock listed. 1303 is where it listed. It's still around the same price as we speak. And as it rose to a day's high of 1344, which is the exactly double of the IPO price of 672. And there are other IPOs as well. And this listing has come after a very long time, such a kind of listing that the Indian market has seen. The last one that we saw was Latent View Analytics, which happened in November of 2021. Now remember, Latent View is the most subscribed IPO in Indian history. Now that listed at a 169% premium to its issue price. It had an issue price of around 200 odd. It listed at around 530. Just a month before that, we had Paras Defense in October of 2021. Now that had almost tripled compared to its IPO price. And there are other such IPOs as well. There have been MTR Technologies, Tatva Chintan Pharma, Happiest Minds, Root Mobile also come to mind. Now the last two listed in the pandemic year of 2020. Happiest Minds had doubled from its IPO price, and even Root Mobile had listed at an 85% premium. And there is one that I want to mention, which is Salazar Techno, which at one point of time was one of the most subscribed IPOs in the country. Even that had listed at a 140% premium compared to its IPO price. So a bumper listing, the stock of the day without a doubt, and the euphoria is well and truly back in the IPO markets.
Euphoria indeed is well and truly back. In fact, we did speak to the management today as well, and they told us that, with the current capacity that they have, they can triple their revenues, margins be between 30 to 40 odd %. And they've said that they will look at reducing their working capital days and also perhaps turn in positive cash flows for this financial year. So let's listen into what the management had to say, because that's more important given the sort of premium that the stock has listed at and is trading at as well right now.
Currently, the capacities that we have is about being able to do close to 9 drones a day. And that capacity is only a single shift capacity, right? And then the drone mix, as it evolves, the revenues from the mix can evolve a little bit based on that. But the capacity itself can scale up to 3 times in the same facility, right? Because we are doing currently only a single shift operation. So there is a lot of room for growth in terms of capacity itself in the existing infrastructure that we have. See, at peak levels, I think we should comfortably be able to cross 2 to 3 times the current revenue as the orders pipeline build in over the next, next few years time frame. Operating cash flows, if you see, in the year before that were positive. In the year, because these are snapshot numbers, but overall, we haven't seen a very challenging time in terms of cash flows in the recent times, particularly because the chunkiness is what sometimes causes the, cash flow negativity. But then, it fills up quite fast as well the moment we get the credits back.
All right, that was the management of Idea Forge. In fact, we have Prakash Diwan joining us on the show right now as well. Prakash, what do you make of this? I mean, a company trading at around 5,300 crore market cap, revenues of sub 200 crores, but they believe that they can triple in the next few years with margins between 30 to 40%. Will you be comfortable giving it, even if the profits triple from here, around 57, 58 times price to earnings multiple?
Oh, absolutely no at this point, Mangalam. So let's look at why there is so much of a fancy. First and foremost, it was a small IPO. The company is in an area which is very attractive, has had all the positive noise and tailwinds to kind of back it up. The market is probably penciling in, the investors are penciling in a very clear growth trajectory for some of these businesses which are uniquely positioned. But remember, in the startup space, in the unlisted space, there's a host of companies doing work which could probably equal or even better than Idea Forge. So I'm not low level, but are you willing to pay this kind of a premium for a business that is yet to prove itself on scale? But the answer to that, in my view, is not yet. I wouldn't mind buying it once the business stabilizes and grows and establishes itself. And then you could probably, look at it differently. But at this point, it's too much of a high-risk fund. The risk-reward, in my view, doesn't really... if you have got allotments, you could make money, get out quickly because you're already penciling in growth for the next 3 years into this price.
All right. Prakash, just hold on to that thought. We're getting some numbers coming in from Tata Motors. The wholesale numbers are looking quite good. They're up close to around 30% if you compare it on a year-on-year basis as well. So, this is coming on the wires. Wholesales in Q1 were at around 93,000 odd. That's up 30% in comparison to the first quarter. So that's an important statement. And one more statement they're saying that Tata Motors, they're saying JLR expects to report positive free cash flow of over 400 million pounds in a quarter. So that's the reason why, in fact, that stock has spiked up to the high point of the day, getting an operational update for the past quarter, as well as positive statements on the cash flows. Explains why the stock has moved up. Prakash, quick word on Tata Motors before we move on. What's the view now? 600 rupees stock.
So yeah, very important that these numbers, operational numbers, actually are the enabler to that free cash flow generation, which is what the market is very, expectantly waiting for with bated breath. Tata Motors has run up in anticipation of the balance sheet improvement, the deleverage that they actually have done very well, and the positive tailwinds on the sector as a whole. So my sense is that a lot of the good stuff is already priced in. There's a lot of exuberance. In fact, it's set in such a way that any disappointment from here on would just kind of bring it down. So I wouldn't recommend any fresh buying at this point, but given the fact that it's done 70-80% in the last 1 year on the back of all these expectations. So let these expectations play out. But this is great news that you get from the operational side.
Not so great news for beer consumers and alcohol consumers in the state of Karnataka, because the government, the state government of Karnataka, has hiked excise duty on both Indian-made foreign liquors and on beer. Surbi joins in first with the details. Surbi.
Thanks for that, sir. That's rightly, as you said, Karnataka state has, increased excise duty on IMFL by 20% and on beer by 10%. Now, this is going to impact all players, United Spirits, UBL, Radico Khaitan and Som Distilleries. Now, analysts estimate that Karnataka as a state contributes to close to 20% of the overall industry volumes, and the price increases that the company will take will be in the range of 20 to 25%. So, volumes could be impacted going forward. But they also say that these price hikes will get absorbed by the latter half of the year. We were joined by Som Distilleries management earlier, and they said that Karnataka is a market of 7 crore cases for IMFL and 4 crore cases for beer, and the companies will have to increase prices by anywhere in the range of 5 to 10 rupees per bottle. He also said that beer players will benefit as the tax increase is only by 10% versus IMFL, where the excise increase is by 20%.
Okay, Nigel, do you feel happy that we don't stay in the state of Karnataka, considering it's a Friday?
Right? Doesn't matter, right?
Actually, yeah, that's the other thing, whether it's cigarettes or whether it's alcohol, all these sin goods.
Reema just, went for it. She said, when are we getting the beer in Maharashtra? That was the final question. I loved it. Hunter, we actually have tried. I was studying the company before, when we were trying to do something on Inside Out. And then I called up the local guy. I said, will we get it? I tried a couple of local guys. In fact, when the management joined us, even a couple of months ago, I mentioned to him, I said, we're not getting it over here. He said, maybe it'll happen. But
he said, pray for us, give us our good wishes, and then, so I guess it's, some
roadblocks. This is good wishes for Hunter Beer to come to Maharashtra.
He wants.
Okay.
He said.
I think good time to take this conversation to Prakash.
Yeah, I think Prakash has, I'll tell you what, and Prakash has been very positive on this stock for the last, I remember about that. Prakash, I don't know whether you're still tracking it, but I recall at much lower levels you were positive on it.
Oh, absolutely, Nigel. I think 100 levels, 100 rupees, 110 is when we first kind of started looking at it, given the kind of changes that were happening in terms of the market share. And there is a very specific reason they are not in Mumbai and Maharashtra, because they don't have a production unit out here. They don't have a domiciled business here. If they were to have something like that, then it changes the game, because the liquor business, especially the beer business, is extremely fraught with working capital traps, and then you could actually end up getting stretched too badly. Karnataka, specifically this hike that you see, I'm sure this will get absorbed along with its power cool portfolio from Karnataka. So it will get impacted in the beginning. Fortunately, it's happening in a lean season, Nigel. You remember, their peak season is actually about till June. April to June is one of the best quarters. And the next 2 quarters are anyways likely to be subdued on sales. So they'll probably get time to rework their pricing and the marketing strategy around it. But I'm sure the industry will absorb it. And possibly the delta between, market shares between UBL and, the brands that Som owns will probably increase in that sense, where it will reduce, which means Som could probably take some bigger market shares as they improvise on this opportunity.
In fact, what the management told us, that their market share in Karnataka has gone up from 6% to 21% in a span of about 2 years. So they are making rapid strides in the state of Karnataka. That's they are offering on beer. Prakash, do stay on. Need to slip into a very short break. We'll come back and discuss more on markets. Rupen Rajguru of Julius Baer joins in on the other side.
Welcome back. Well, though the market continues to reel under pressure today, there is some green out there, and it's jewelry stocks that are really sparkling bright, and the numbers are nothing to scoff at. Whether you're looking at the Q1 update from Titan or even Kalyan Jewellers, Mangalam, that number that you said in the morning, 30% growth, Kalyan Jewellers in the domestic business, really stuck in my head.
Yeah, 34% to be precise for the India business for Kalyan Jewellers. In fact, for Titan as well, on a strong base, you know, the company grew 21% in their jewelry business. Overall, it grew about 20% as well. And quarter on quarter as well, it's a 20% growth. And this, remember, at a time where we did see a fair amount of volatility in gold prices. In fact, Titan has gone ahead and said that this time the growth was led by the number of buyers as against just a small clutch of buyers buying a higher value. So that's telling you that consumer sentiment is broadening out and it is improving. Akshaya Tritiya sales in April, wedding purchases in June were robust for both Titan as well as Kalyan Jewellers. And Titan has some other engines of growth as well. While analog watches grew about 8%, their wearables grew about 84%. Eye care division saw sales growth of almost 10%. Their partner, or rather their subsidiary, Carrot Lane, saw growth of around 32% as well. And we saw ethnic wear, Taneira, grow around 81% for them. The only fly in the ointment for Titan is the valuations, and the stock has seen a near 47-48% rally in the last 12 months, trading at sky-high valuations, which is why, despite the uptick in the morning, we've seen the stock come off the highs. No complaints for Kalyan Jewellers, though. I mean, 34% growth in their India business, and most of the growth coming in from the non-south verticals, where the company has added 12 stores. By Diwali, they plan to add around 20 more stores, and as a result of which they will see higher margins going forward in their studded share as well, because non-south markets are more, semi-precious and diamond sort of markets as against south, which is traditionally gold. But important to watch out for their gross margins going forward as well, largely because a large part of their revenues will now accrue from franchise stores, and that has lower gross margins, and that's what we saw in the first quarter too. But no complaints about Kalyan Jewellers as well. Despite the 150% rally that we've seen in the last 12 months, the valuation gap between Kalyan and Titan is still a fair bit. So let's see whether that narrows further or not.
Okay, all right, Mangalam, thanks very much. Pretty interesting updates really coming in over there. Prakash, so you tell us, I don't know, are you buying jewelry? Are you buying jewelry stocks? Because the numbers are pretty impressive, to say the least.
Oh, absolutely. I mean, these numbers continue to reiterate the, belief that demand in the luxury premium segment in India is absolutely seen no letup. It's only the entry level, more affordable price points on all product categories, be it automobiles, staples, consumer goods. So I think the story continues. This is a segment that would grow, but I wouldn't even put Kalyan in the same bracket as Titan. If I had to choose, it has to be Titan at some price. Right now, given the fact that a lot of the other revenue streams have started contributing, is a great development for Titan's premium valuations to get justified. But let the EPS catch up, let growth come up. These are numbers that you got on the operational side. Let's see how it translates, and I'm sure it will translate linearly into the financial metrics as well. And once that happens and it comes into an affordable risk-reward range, probably that's the stock to latch on to. Kalyan is, of course, doing a lot of right things, but it's a bit too early to call out whether this is going to last them too long and there's going to be a PE reset for them or premiumization coming to them. They're doing certain things which are quite different from other jewelers. They're leveraging the brand in a very effective way rather than investing too much into their own showroom. So it's an asset-light growth model which can happen much faster. So good stuff, but it's still Titan at some price which is affordable.
By the way, there are some extraordinary spikes taking place in some of these mid-cap names. Pull up a Zee Entertainment, a 9% rally on Zee Entertainment. You've got PSU banks, which are inching higher. Pull up a Bank of Baroda. Pull up, I think even a Union Bank is higher in trade. PNB is up and about in trade. Canara Bank has seen a bit of a spike. Oil marketing companies are inching up, so IOC is moved up. You also have strength in HPCL, but I think the stock which takes your breath away is Zee Entertainment right now. India Bulls Housing Finance is also seeing a very sharp spike. These are stocks which are seeing some up move, but Zee Entertainment, India Bulls Housing Finance, PNB, and Tata Motors, a stock that we earlier spoke about on the back of those wholesale numbers, is also flying. M&M Financial, on the other hand, is under pressure on the back of a downgrade from BofA Securities. Nimesh is standing by with the details. Nimesh.
Hi, Rivas. As you rightly pointed out, the stock is under pressure on the back of a rare downgrade coming in on M&M Finance. So BofA should have downgraded the stock to neutral from overweight, but they've raised the target price to 375. But the target price increase is largely on roll forward to FY25 estimates now. The key reasons for the downgrade is one, the stock is valued 46% Y2D, and the valuations now are at a premium to long-term averages. Now the stock is sitting at nearly 2.2 times FY25 estimated price to book value. So that's a bit of a concern for them. Now, in terms of expectations, the street expectations are quite high, and but the BofA note says that maybe NIM and OPEX could disappoint in the near term. In fact, for quarter one, they're expecting a loan growth of 4.6% quarter on quarter, but a 16 basis point NIM compression as well. However, while BofA likes the long-term story for M&M Finance, given that there is a change of management as well going forward, but in the near term, the valuation is a big concern for them. The diversification in the product and consumer should mean that the volatility in asset quality should go down from here on, which is positive from an investor point of view. But the downgrade rationale is purely on back of big move in the last 6 months and the fact that now the stock is sitting at an expensive valuation higher than the long-term averages.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get chatting with Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer, who joins us on the show. Hi, Rupen. Good afternoon. Thanks so much for joining in. What do you make of the markets? I mean, we've seen a good run from around that 16,800 odd mark, closer to around the 19,500 mark. Do you think there is limited scope on the upside for the headline index? And now it'll play out more like a stock-specific market, say in the next 12 months or so. Maybe we go to 20,000 odd, but what from there? Upside appears capped?
Hi, afternoon, Nigel. No, you're absolutely right when you say that from an index level, last 3 months have been exceedingly good. Nifty is up absolute almost 10% in last 3 months. But if you see, there was a big time correction as far as Nifty is concerned, and almost 18 months of time correction. And one more heartening thing about this rally, I would say, and if I were to compare India vis-a-vis US, is that Indian rally has been far more broad-based. If you see YTD Nifty's, say, as of June end, up 6% but roughly 60% of Nifty stocks have given returns higher than Nifty itself. And the average return of that 60% of the stocks is almost 14%. So that means it's been the far broad-based rally. And if I were to also look through for a bigger S&P 500, same thing, more than 60% of S&P 500 stocks have given returns higher than S&P 500, and the average return is actually there upwards of 20%. So coming back purely from valuation perspective, the more the market goes up, the probably the index level upside might be capped, but there are plenty of opportunities around. And as I said, the broader market is giving much higher returns than Nifty. And I think that trend will continue for next 1 year or so.
Okay, Rupen, so you're sounding pretty optimistic even at these levels. Good to know that. So let me then dive a little deeper. Broader markets, give us some sense. I know you won't talk stocks, unfortunately, but at least some idea about the themes where you still see value and growth prospects.
Surbi, afternoon. See, India story, I think we all know there are 3 big pillars for the India story, right? Wherein there is manufacturing or infrastructure growth. Second is the consumption story. And finally, all encompassing, it's the financials. So that's the India specific story. Export is there, but export will depend on a lot of external factors. As a theme in markets like these, typically in all-time high level markets, what we have observed should be, there are a lot of mean reversion stories which come into vogue and which, actually plays out pretty well. If you dissect, the top performing stocks in Nifty would be the beaten down tobacco stock or the auto stocks, large auto stocks, which had a huge exposure in the international markets, which nobody wanted to own. That has given phenomenal returns. So as a theme, what will happen within the sector, intra-sector, there would be, opportunities which would be available. But I think as a relative play, I think healthcare looks pretty good. Insurance looks pretty good, even at these levels. And probably now in financials, the big 4 actually has not given much return. So from here on, actually, it can also lead us to newer market highs.
Right. Rupen, just wanted your thoughts on a couple of sectors here, because from the last time we spoke to now, one change that has come about is that earlier you were underweight or negative IT. Now you think that it's come to valuation comfort zones. You are saying buy large cap IT from a 2-year standpoint. That's one. And second is pharma, because contra call on pharma and OMCs has worked well this year. What does one do with the pharmaceutical pack right now? Is it time to take some profits and deploy it into the IT sector?
Yeah, hi Mangalam, and just to correct you, I was constructive on IT as well when I last spoke with your channel. See, IT typically, as I said, in markets like these, probably if some good news comes from the overall global front, right now I know there are too many moving parts, and whether rate hikes will be there, what intensity of rate hikes will be there. So a lot of corporates internationally are kind of going slow on the discretionary spend, but at the big picture, the cost takeout order flow definitely is there. And see, historically we have seen IT going through phases, and probably I'm saying this is one of those phases. And come this result, I think you might see the IT bottoming, at least the large cap IT, while the mid cap ITs have been flying high. And actually I've been wrong on mid cap IT, wherein I was not so positive on mid cap IT, but my mid cap ITs have done exceedingly well. But here on, probably I believe large cap IT has good scope of going up from here. And on pharma, again, that's been beginning of the year we have been positive on pharma. And it has actually worked well, especially in last 3-4 months. And as I think we all have been reading, that the number of drugs which are like on shortage is more than 300. And clearly the key issue which was ailing some of the big pharma names was the price contraction in the US, and we believe, I think we are very close to that, and here on we might actually see stability in that, and hence some bit of valuation re-rating. Some has already happened. I think there is still some scope of that happening even from current levels.
Rupen, you look at the oil marketing companies. For a while now, we've been talking about how pump prices have not fallen, and therefore oil marketing companies like your IOC, BPCL, HPCL will all be making a very handsome marketing margin in the current quarter, because their buy price is a lot lower with the decline in crude prices. And brokerages are talking about a marketing margin of 8 to 9 rupees, but the stocks have also run up. Has this news been priced in? And how would you approach oil marketing companies from here on, post the rally?
Yeah, hi, Rima. And see, historically, oil marketing companies have always been a tactical place for us. Here it's very difficult to take a 1-year, 2-year view there. And one of the view which we had taken with the same logic that when the entire PSU pack had rallied, and the valuation correction had happened there, I think OMCs was one pocket wherein we had not seen any meaningful re-rating, right? And some of the stocks probably a couple of months back were trading at below book, and historically they have traded between say 0.6, 0.7 and to 1.2 on the higher side. So now they all are approaching at the higher end of that, closer to 1.2 book. So I would say that these stocks as would be time to take some profits there, once we see, because as you rightly said, this quarter the results are going to be blockbuster, because YOY there was big losses, and now, as you rightly said, especially the marketing margin on diesel side has upwards of $9, and you might see a good overall profitability there. But I would say that would be the time to take some profits out there, because we are getting into a heavy election calendar, and probably in the run up to the state election, at least the incumbent government will force the BJP led states to cut rates in the run up to the election. So that fear is always there, and hence you might not see a big upside from it.
Okay, all right, Rupen, we will leave it on that note for today. Thank you very much. Always good getting views from you. You have a good weekend, and we look forward to the next chat. Let's take a quick break on that note. And as always, we will check out what's happening with the dealing rooms today, a day of profit taking after a long, long time. So Nimesh comes up with the chatter, and then we'll get Mitesh back in with some final trading ideas for this day.
Welcome back. You're watching us here on Closing Bell. The markets continue to see a bit of a decline. We're coming to you live, of course, from the CNBC-TV18 Motilal Oswal newsroom. And the Nifty now has virtually moved to the low point of trade with a cut of almost 60 points coming by in just the last few minutes or so. 19,343 is where the Nifty is. It's led lower by the Nifty Bank, which is now down around 370 points. Looking for some other heavyweights as well, which may have impacted the frontline index, is the HDFC triplets. HDFC Limited, HDFC Bank and HDFC Life. Of course, HDFC Life doesn't have as much of a weight on the index as the other two, but we are seeing a wee bit of a sell-off. Good time to get in Nimesh. He'll talk us through what the chatter on the D Street is. Nimesh, some profit taking today.
Not surprising, the way we've rallied for the last many days, for the 8 consecutive days we were going up. So a bit of consolidation, so to speak, with a negative bias, some bit of profit booking as well. I guess even the weekend phenomena will play out for a lot of retail investors as well. So that's playing out in the broader markets. But again, the feedback is there are not large selling orders. So this whole sell-off what we are seeing is largely profit booking than rather big selling from the larger FIs. That's overall feedback. Having said that, the flows are quite mixed with a very, very stock-specific moves today from the larger institutions. That's the overall feedback. The theme that stands out for the last many days, I've been saying it every day now, is the PSU basket. The entire PSU space is doing good again in today's trade. The OMC stocks, the PSU bank stocks, all are buzzing and are well bid as well. As I said, a bit of profit booking in mid-cap as well. Nothing wrong in that. But even within that, there are a lot of pockets which are doing well within the mid-caps as well. So I guess after 8 days of consecutive up move, a bit of consolidation with a negative bias. And I guess also the global cues were not very supportive, which has led to this bit of a profit booking in today's market.
All right, take that point. A bunch of media stocks doing extremely well. PVR's moved to the high point of trade. Z2 has surged 9% higher. Does that find a mention on your list of stocks that you have today?
That's actually my first stock, Mangalam. And the key reason is I believe there are strong buy flows at HNI desk from on Z Entertainment. A couple of large HNI investors are quite active as well. So that's the reason why a big surge. In fact, intraday it's recorded more than 10% in today's trade. So that's the first one. The second stock is UPL. That stock is under pressure today, but I understand there is good amount of buying interest back on that particular stock. A couple of leading HNIs are quite actively buying into UPL in today's market. So the delivery volumes are going to be quite high in UPL. The third stock is South Indian Bank. Not much been talked about, but again, this is one stock which has come into the larger investor radar as well. So surprisingly, for the first time, I'm hearing buying flows and buying interest from larger FI desk as well in South Indian Bank. So that explains the big move there. And the last stock is Granules. While the street is anticipating this quarter to be quite weak for Granules, but from the lows, the stock has actually recovered. For the last 2 days, it's been buzzing in trade on good volumes as well. And I believe one of the domestic PMS fund is quite actively buying, and hence a big move in that stock as well.
Okay, all right. So lots of interesting stocks on the radar. Nimesh, before we let you go, I just want to pick up on Z, because this move is really stunning. I think the NCLT hearing, the SAT hearing was yesterday. And from what I remember there, I think the lawyers on behalf of Puneet Goenka made a very passionate plea, saying that it's not about the person and the merger is more important. Even if Puneet has to go, he will go, but the merger needs to go on. Now, I don't know if there's a late reaction to that or what. I mean, what's happening? What are you picking up with this 8% move on the stock?
So Surbhi, again, let's not speculate as to what can come from the court hearings, because that's very speculative, and it's a binary event, so to speak. But the events to track from here on, there are a couple of events to track. One, of course, is the NCLT hearing, which is scheduled for 10th, which is on Monday. Now, that got postponed from yesterday to Monday now, so that's something to track. But before that, I believe the other important thing would be the SAT judgment as well. Remember, SEBI had actually came out with a report and they had banned the promoters from holding the top positions in any listed company, including Z as well. And to that order, the promoters had moved to SAT. So that SAT judgment is likely to come in days to come. So that's something to track as far as the Z and SEBI matter is concerned. And of course, the NCLT is a big thing to track for. What I understand from the hearings and the judgments and whatever the counter argument has been, one of the key contention for Z counselor is that the fight is not with the creditors of Z now. Okay, most of the creditors of Z have been paid off. What the other creditors are fighting for is basically the fight is between the creditors and the promoters of Z and not the Z company per se. So that probably is the reason why there is an expectation that maybe the NCLT hearing will get concluded very soon in the days and weeks to come, and then potentially means that the merger will go through. So Of course, it's all speculative, so to speak, because the judgment has not been yet. But two things to track. One, of course, the Monday NCLT hearing, and we need to see as to what comes out in terms of SAT judgment against the SEBI order.
Okay, thank you very much for that. Z Entertainment is a stock which is on fire. By the way, pull up the Nifty once again. There has been a second dip in the markets. Remember, we told you the first dip was bought into. The markets were sliding. Then they attempted to form a bit of a base. They tried to inch up back to levels of 19,400. But post 3 o'clock, there has been a sudden fall in the markets, and the Nifty has very quickly, swiftly given up gains of close to about 50 to 70 odd points. So now we're down below to levels of 19,330. Getting to a bit, perhaps, uncomfortable levels. This is where a lot of technical analysts had told us lies support. In fact, Mitesh Thakkar is back with us. Mitesh, I remember in the morning you were telling us watch for levels of this 19,300, 330. What would you do now at this juncture, and then your calls for the weekend?
So in fact, we have maintained that 19,350, 330 is an important level, and we didn't get a bounce back. But again, the second selling pressure is very high. So what we have done is we have clearly pruned and exited most of our long positions. On the stock side as well, right now I have one buy and one sell. My basic idea is that an hourly close below 19,350 could suggest 19,200 being tested again. So I think taking profits of long positions is a good idea. On the stock side, one BTSC, one ST. ACC is STBT with a stop at about 1,800 for targets of 1,770. And Bank of Baroda, PSU banking model is doing very well. BOP is a BTST with a stop at 206 for targets of 212.
Okay, all right, got that, Mitesh. Thanks very much for the calls. You have a good weekend, and we'll connect again next week. We have Sudeep Bandyopadhyay now joining in. He is, of course, Group Chairman at IndiTrade Capital. Sudeep, thanks for being with us today. So what do you make of the cool-off? I guess no one's surprised, but the question is it disappointing that we've seen this 170-point drop? It's been pretty much one way. There hasn't been that buying or on dips. So would you not worry at all, because it was just perhaps a bit of an overheated market that needed to cool off a bit?
Hi, Sudeep. I think there's nothing to worry. I mean, the attractiveness of India continues to remain very, very strong. There is enough and more liquidity chasing Indian stocks, both international as well as domestic. The way the market had run up in the last few days, and we have, we got used to seeing everyday new highs. For the health of the market, some amount of correction, some amount of profit taking and consolidation at these new high levels is par for the course. I think it's good for the health of the market. Let it correct a bit, let it consolidate around these 19,300 levels, and then take the next leap. I think that will be good. And if you see, there is no slide as such. It's not that there is a massive selling happening in any counter or anything like that. It is a little bit of selling at different counters, which I will put down to a little bit of caution, a little bit of profit booking, and a little bit of holding back from investing at every low levels. So there's absolutely nothing to worry. As I said, liquidity is enough. The macro and micro factors are also fantastic. The monsoon, which was a big worry, I think it's progressing pretty well. The corporate results are expected to be better both in June as well as September, the way things are moving. And oil prices are where they are, which is definitely good for Indian macro.
All right. Hi, Sudeep. Good afternoon. Sudeep, I wanted to ask you about the real estate space. That's been buzzing around. Today you have Mumbai-based developer Sunteck Realty. That's up close to 14%. Yesterday as well, it was up close to 5%. In a couple of sessions, after being an underperformer, it's up 20%. What's your view on real estate, and do you have a pick from there, among the listed players?
Well, Nigel, we have been positive on real estate for last about almost a year now. And yes, we do have a lot of interesting ideas. I think, number one idea is Godrej Properties. I think that is a stock which we have been recommending for some time. We believe it has got significant, opportunity from further up move from here. So somebody having 1 year time horizon, I think Godrej Properties is a good buy. I think there were some research reports in the recent past strongly recommending Godrej Properties as well. There is actually no big negatives in DLF as well. It has run up a bit, but still, I think it's got a long way to go. As far as non-Mumbai, non-NCR, we can look at Shobha. I think that's also looking good at current levels.
All right. I wanted your thoughts on the auto ancillary space, Sudeep, because we have on the one hand JBM Auto, which is surging about 4% the biggest gainer today has been Olectra Green Tech, up almost 18% They got an order for 5,000 plus buses. Orders worth nearly 10,000 odd crore rupees coming in to them. Your thoughts on this EV / sustainable buses space, and how should one look at it? Do you have a pick there?
Well, definitely. I think, Mangalam, the way I look at it, instead of looking at the OEMs, I like the ancillary guys. And I think the opportunity of, a certain bet is more there than on the OEM. OEM, one is not exactly sure how things will pan out. It's absolutely initial stages, and eventually who will emerge winner, who will, garner more market share is difficult to predict. So ancillaries will be better bet. I like Sona BLW. I think they have a significant opportunity on the EV space, and they're doing all kind of right things. Of course, I like Samvardhana Motherson as well. They are doing all the right things, and the recent buy of Honda ancillary manufacturing company, 81% stake acquisition is a good step. The other ancillary company I like is Bharat Forge. It's a mixed reason. One is the core business of forging, which also to a great extent depends on American Class 8 truck volume pickup, is picking up, and Indian market also is looking up for them. But more importantly, the aerospace and defense, which Bharat Forge is present in, that's doing very well. That's an exciting area. They're doing pretty well. And that's probably not yet getting captured in the market valuation of Bharat Forge. So we believe Bharat Forge is a great opportunity to buy amongst the ancillary space.
Okay, like Bharat Forge and even Samvardhan's acquisition looks good, pretty good according to you. Sudeep, do stay on. We need to get into a break. As we do that, here is a quick programming note. Our weekend special Editors Roundtable is coming up at 4:30 p.m. today. We get you a sneak preview on the key themes on today's show. As we gear up for the earnings season, Nimesh will get us a roundup of all the key expectations from the big sectors.
Taking the discussion forward on earnings, Rima, of course, gets us all the key expectations from the IT sector.
Premium motorcycle market in India is set to see a fierce competition with top manufacturers aggressively launching new models in the cruiser segment, which was long dominated by Eicher Motors' Royal Enfield. Will the challengers be successful? Nigel will get us a comprehensive analysis.
And finally, we'll talk all things market with Andrew Holland of Avendus Capital, Public Market Alternate Strategies. So don't forget to tune in. Editors Roundtable at 4:30 p.m. today.
Welcome back. Last few minutes coming up of closing bell. Sudeep Bandopadhyay is still with us. Sudeep, Tata Motors, the markets are at the low point of the day. Tata Motors is doing a thing of its own. We had some, JLR volumes that came in at the start of the show, and also some positive commentary on the free cash flows. They're saying that it could be 400 million pounds. What's your view on the stock from these levels?
Well, I think, the news all around Tata Motors has been positive, and it has been positive for quite some time. Also, the EV business has really picked up well. The JLR numbers coming good, I think, is very interesting. I only have a little bit of challenge with the valuation, which it has already achieved and where it is trading today. I don't think I'll be comfortable, recommending a buy in Tata Motors at current levels. There is no need to rush and exit Tata Motors as well, but a fresh buy at these levels are not recommended.
The reason why the street is very happy with these numbers is because Q1 is generally a leaner quarter. It's not the strongest quarter for them. So in this quarter, the company's clocked in a wholesale growth of 30%, retail growth of 29%, and plus the free cash flow of 400 million euros. That's something the street finds very encouraging, and the stock is moving up and up. Sudeep, do you look at Intellect Design Arena?
We do, and I think there are a lot of positives there. But at this stage, I think the valuation is a little rich, and the government order which they had, I know it's not a big part of their profit EBITDA. It's about 2% of EBITDA, which they have lost now. It won't affect, but obviously there is other related issues of manpower and other reorganization, which it will entail. I'll wait and watch how things pan out for Intellect post the loss of this, the government business.
Okay, that's Intellect Design Arena. Sudeep, just want to get your sense on some of the urban discretionary plays. Now look at what the jewelry companies have done, and we know real estate has been the numbers have been going through the roof. So if you were to play the discretionary theme, what would be the one or two stocks that would be your top picks? We know that you've been a big Titan fan for a long time, but anything in the smaller category, even beyond the Nifty 50 as well?
I liked, what Kalyan is doing, and the update which Kalyan has given. I think it's encouraging. I'm not saying that I'll definitely go and pick up a Titan even at current level. But if I have to go, away from Titan and buy one stock in discretionary consumption, probably that will be Kalyan at current levels, because of the fact that there is a significant valuation gap between Titan and Kalyan. It will always remain. But at current level, with the way Kalyan is moving, I think it's worth picking up Kalyan at current level.
Sudeep, thank you very much for joining in, coming to the close of the trading day, the trading week, and it's going to go down as a weak session for our markets. The Nifty is closing closer to that 19,300 mark. The intraday high on the Nifty was a level above 19,500, which means a spill of 200 points from the day's high, and we are practically closing at the day's low. So that dip hasn't been bought into. Remember, the Asian market picture was decisively lower, and that put pressure. Quickly to run you through some of the big drags in the market today. Banks sold off. The Nifty banking index is down close to about 1%, with names like IndusInd Bank, ICICI Bank under pressure. You had Power Grid, which is the top Nifty loser. Adani Ports down nearly 3%. Apollo Hospitals, a cut of 2.5%. FMCG names also sold off. HUL, Britannia, Tech Mahindra were Citi was a bit surprised by the 17% up move since the April lows, and they recommended a sell. So Tech Mahindra lost ground. Tata Motors was the big winner after the JLR numbers came out. The stock closing at the session highs and at a fresh 52-week high, 4% up on that. And Titan off from the day's high, but in the green still.
Well, indeed, Rima. In the broader markets, there was some pain out there. We had more number of stocks that were declining in comparison to the number of stocks that are advancing. But let's run you through some winners first. You had Electra Green Tech. The stock was up 17%. Big order is what they won, and that's why, in fact, that stock trended higher. The day belonged to Idea Forge. New kid on the block, blockbuster listing. If you got it, you almost doubled your money on day one itself. But interesting to see how they fare from here. Z Media as well. That's a smaller stock out there. That was up close to 19% for this week. It's up close to around 40%. It's only a 10 rupee stock, but that moved higher. Talbros as well was higher. And Max India as well. I'm pointing some of these stocks out because otherwise the markets are quite weak. But these stocks were on fire in today's trading session. Surbhi, what else?
Well, these were the main ones that were moving higher. I'm looking at Dabur. I mean, the final quotes that are coming in now, 3.5%. That's a lot of pressure on Dabur as the day is closing out. Other than that, in terms of where the profit taking was apparent, Titagarh Rail down about 5% as well. Some of the other names like MRPL, Nykaa and Marico from the consumer space, slightly subdued. So was DLF. Paytm losing about 2.5%. But, these are stocks that have rallied 50-60%, many of them this year. So not much of profit taking either. Zee obviously stands tall, a gain of almost 8.5% as we are closing up. And even the PSU banks, once again, they've ended the week with a flare. PNB, Canara Bank, Bank of Baroda. These are names that are creeping up on the positive side in the dying moments of trade. But overall, we'd have to say 170 gone. A day when the bulls finally had to take a back seat and the bears decided to come in and take some money off the table.
Okay, with that, we're going to wrap up on Closing Bell, but don't go anywhere. Our special offering, Market Masters, comes up next.